This
Now.
conference will now be recorded.
Hi, my name's Clark Harvey. I'm here with David from Linbase. And, there's a lot of people asking me questions regarding private money, hard money for homes. Can you tell us a little bit more detail on that and what they can expect from what Linbase can do?
You bet. So at Lendbase, we work in a lot of different spaces, but whenever we need to do something that's non-traditional or we need to move faster, we do have private. Now, private money, bridge money, hard money is all the same thing to me. I know that others may discuss it differently, but private money is, it could be an individual, it could be a group of a family office or a bigger group that offers basically this money that is quick. Documentation is very little. So right now, today, this is February 13th of 24. Hard money is between, or private money is between 9 and 14%. Now, here's what's interesting. The lower the rate, the higher the points. So if you do something at 9% rate, you will have 5 points you have to pay, 5%. 14% will be 2 points. So you kind of pick your poison. Now, if you have 25% down, that's 75 loan to cost. You can do private money or bridge money for a variety of things, to buy something quick so you can take it off the market and refinance it. And banks will let you do all that. We can do both sides of that. If you want to buy something and do a fix and flip, the last fix and flip I personally did was 12 and 2, 12% rate, 2 points, and they lent me 75% of the purchase and the rehab amount. Plus, they goosed it up a little bit by giving me some money to pay for the interest payment during the flip. So private money can be very flexible and it can be used on any sort of investment. Now, most private money lenders stay away from primary residences. So this is for investment or business. If a business is going to occupy a space, and right today, that's where the rates are. Now, I can do private money on equipment also, 14% and up, and then refinance into something bigger or longer term if need be. Typically, private money is 6 to 36 months in length, typically 6 to 12 months, but we can go up to 3 years. There's a 1 to 4 week close, and it's truly an asset based loan. Real estate is typically the collateral. Bad credit is not a problem.
And you can do
Felonies
this
are not a
nationwide,
problem.
right?
What?
You can do this nationwide. Sorry about that. You can do it
Nationwide,
nationwide.
all 50 states. That's right.
And what
Um,
about the ARV, after repair value?
So yeah, I was going to get there, but good.
Oh.
Thanks for bringing that up. So how we qualify it is you have to have two pieces. You have to have the down payment, and you have to have the after repair value. So for example, it needs to be at a 1.25 DSCR, meaning if you're going to borrow $100,000, the after repair value needs to be more than 125,000. So whether it's 150, 200, 500, a million, 10 million, the after repair value, if you're going to buy and fix and flip a property using private money, it's 75 loan to value, and then it has to appraise for 25% more than the value of the purchase and the cost of the purchase and the bill and the rehab. Does that make
Got it.
sense?
Yep, got it.
Now,
Thank
there's
you.
some additional fees. There is the points. There's also going to be a document fee. There's going to be title work. And sometimes some lenders will ask for an appraisal. Sometimes they don't. So it's to be determined depending on the lender. The one I did didn't require it. He showed up, we opened the door, he peeked his head in and he left. He just wanted to see it was a real building. Some will do drive-bys, some will do desk type of thing, but many times there's not a need for an appraisal on hard money. So 1 to 4 weeks. Is there anything else? No. Oh, no credit, bad credit, foreign nationals, bankruptcies, felonies. All of that is one of the main needs for private money. But the biggest reason is quick. We need to move quick, pull it off the market. And if you don't want to jump through all the hoops to do a fix and flip, it's easier than doing a bank fix and flip. Does that make sense?
Well, yeah, it does. So, what would be the next step for someone to do this? Do they get a pre-approval letter? How does that look?
Good question. No. There in the residential world, Clark, for example, as a residential lender, he does that also. He can get you a pre-approval on buying a property through the traditional Fannie Freddie method. But in the commercial world, there's no such thing as pre-approvals. No hard money lenders will guarantee funding until they've done the work that they want to do. Now, there's a private money application we have. I need to see a personal financial statement. I need to see current photos, maybe business and personal bank statements, and a resume regarding investments. That's a pretty simple one. Now, my very first flip, I used hard money. I had never done it before, not a licensed contractor. I didn't have a licensed contractor. So it's possible, even with little experience, to be able to get a home and fix it and flip it. You can also use hard money to get it, fix it, and then hold it if your plan is to hold. But we have both options. You can fix it and flip it, or you can fix it and hold it. Really simple paperwork, and it can move pretty quick.
Awesome, awesome. Well, thank you so much, Dave. I appreciate that, and love to learn more of what you guys offer.
Thank you. Just remember, if you want to do these type of fix and flips, go through Clark. He has access, and we'll get up on we'll get a call scheduled and have a call between the three of us. Thank you very much.
Perfect. Thank you.
You bet.
This
Ready?
conference will now be recorded.
Hi, this is Clark Harvey, and I've got Dave here with Lynn Base, and we're going to talk about fix and flip and how that looks and how we can get you that money if that's the space you want to do. Dave, take it away.
Thank you. So we have two versions basically. Generally, you don't go through the permanent bank options for fix and flips. We can do fix and flip through banks, but most fix and flip loans, we do have two options. The first option is private money, 9 to 14% with points, 9%, 5 or 6 points, 14% with 2 points. Now, these rates and terms will change based on, this is February of 2024, and it'll change. It goes up and down. 75 loan to cost to do this. That includes the cost of the purchase and the cost of the rehab. It can be done in 1 to 4 weeks. So one main way that we do fix and flips is hard money or private money. Now we have another option that actually I just started by saying that we don't do it through banks, but actually we do have a number of banks that will do fix and flips for us. Here's the cool part. If we do it through our bank, it's basically a full doc loan. You're going to be doing personal taxes and it's a full process, but it's to 90% of cost of the purchase and 100% of the rehab. So I have two sides. I have the hard or bridge, the hard money, 75% loan to value, rates and terms 10 to 14% with points, 1 to 4 weeks. We have the bank option, 90% of cost will be lent, 100% of the rehab, but it takes about 75 days. So one is fast, very little underwriting. The other one is full doc, takes longer. But if you have a certain amount of money and you want to do 2 or 3 or 4 at a time, then we go this route and you can spread your money out. Now the rates on a bank fix and flip today, February 13th, 7.5 to 12% with points. So 7.5 would be 5 points, 12% would be 2 points. Pick your poison. In the bank side, on the hard money side, it's 10 to 14% with rates and terms that will change. So just remember, with Clark and I, you have both options. We can move incredibly fast, 1 to 4 weeks for hard money, 10 to 14% with points, 75% loan to cost. We also have a longer term, a solution that takes longer, 75 days. It's 7.5 to 12% with points, 90% of cost, and 100% of rehab. So we have two options. Basically, if you can get 10% of the cost of the purchase of someplace, we can help you flip it. And so it takes longer. There's much more detail. It's a little bit more rigorous, but we have both options. So regardless of your situation, reach out to Clark and I and go through Clark. And Clark will set you up on a call and we can have a conversation and get you flipping.
Awesome, awesome. Thank you so much, Dave. I can be reached at 801-557-8540 or email clark@clarkharvey.com. Multiple ways to find me. Thank you so much.
Thank you. Appreciate it.
This conference will now be recorded.
Hi, this is Clark Harvey here, and I've got Dave with Lendbase with us, and he's going to talk about multifamily. Now, when it comes to multifamily on the residential space, I can do up to 4 units in the residential space. Now, it's 5 units and above, we go to the commercial side, and hence why we have Dave here. He's going to explain to us and how that looks and how it can help us.
Excellent. Thank you, Clark. Yes. Now, what's interesting is that I do not do any residential lending through Fannie and Freddie and so forth. I can do, based on debt service coverage ratio, DSCR, I can do 1 to 4 units. But where I really stand out is my 5 or more units. Now, for the last 2 years, we've dealt with COVID and such, and we've seen the rates skyrocket in the last 2 years. We're starting to notice them go back down. So I may sound excited over a 6% rate. This is February of 24, but it actually is kind of cool because it is lower than what most people can find walking in off of Main Street going to a bank. So for multi-unit apartments, I have between 6% and 8.5%. Now, that sounds wide, but it's not really wide. So let me give it a breakdown. If you brought me a property that was over $1 million, multi-unit, 5 or more units, the best rate I can get is 6%. Now that 6% would look like a 5-year fixed, 30-year amortized loan. I can do a 5-year fixed, 7, 10, 12, 15, 17, 20, and so forth. The longer you want the rate fixed, the higher the rate goes. So my 8.5% rate is a long-term fixed rate. Now, in the commercial space, in the investment space, there's a big difference than residential. In the residential world, like when we had a 30-year fixed loan on our home, and when we decided to pay it down, there was no penalty. You could put money toward it, pay it way down, pay it off, no consequences. Well, in the commercial world, generally, if you have a fixed rate, there's going to be a prepayment penalty that coincides. So if you have a 5-year fixed loan, you're going to have a 5% step down prepay. 5, 4, 3, 2, 1 in year 1, 2, 3, 4, 5. If you have a 7 or 10 or 15 or 20, 25-year fixed, if you have a 25-year fixed, you might have a 10% prepay decreasing slowly over 25 years. So right now with rates dropping, you don't want to lock yourself into a commercial loan with 25-year fixed because you're going to hate us. Because if the rates drop in the next 2 to 5 years, you're stuck with a prepayment penalty. So an apartment, 5 or more unit above $1 million, 6% is my best rate. If it's not $1 million, if it's less than $1 million, 6.5 to 8.5 is what the rate range will be. Okay, so that's the range, the rates. You need to have 75 loan to value. Now I'm going to tell you something. You're going to walk in and talk to some lenders and they're going to tell you 80. And the reason is that in the residential world, when you buy a home and you have less than 20% down, you have to carry mortgage insurance. Well, in the commercial world, we don't do the same thing. You don't have this requirement for mortgage insurance in regards to your down payment. Basically, you're going to have to bring 25% down. Now, the reason a lot of lenders say 20 is that that's the best possible scenario. And is it possible? Yeah, it's possible. But there's consequences, rates, fees, and other things. So generally, if you have 25% down, we can get a purchase of a multi-unit down. Now, in the commercial world, we don't look at your personal debt to income ratio. Basically, every single loan that we do is a DSCR, a debt service coverage ratio. So for example, Clark, if you were purchasing a property and the payment was going to be $1,000, I need to see that after expenses, your rent is $1,250, 1.25 of the cost of the loan. And so if you're making your payment at $1,000, I need to know that you might make $2,000. You take expenses off that you net above that $1,250. So In the commercial world also, because we don't do loans off your personal debt to income ratio, I can't pre-qual you. So Clark can pre-qual someone for a 1-to-4 unit. And you can waive that piece of paper at real estate agents and you can go get that loan if you're pre-qualified. In the commercial world, no commercial lender will actually guarantee funds until they've done a complete and full underwrite on that specific property. And here's why. You could have two properties side by side that were built at the same time with the same builder, and one has been managed well and is run well, and one could have vacancies and be run poorly and have all sorts of negative things happening to it. Well, the banks will look at those two properties, and those are two different loans. The property in the nicest part of town versus the not nicest part of town. The property up on the mountain or out by the lake all by itself, the one in the middle of town or in the middle of residential communities will have different loan requirements. So lenders do not give you a piece of paper to waive at real estate agents that guarantee funding on any random piece of paper or property in the commercial world. What they're going to do is they're going to sit there and say, tell me about the property. How much is it? Do you have the down payment? Does it debt service? Those are the qualifiers. Now, we do have other options. We have non-recourse and recourse, and we can do it if you have people that, well, for multi-unit, we're talking residential, but you can also apply these same rules to commercial strip malls and so forth. So in the multi-unit space, just remember, if you have 25% down and the rent debt services at a 1.25 or better, then this is a great opportunity. We can get you this loan. Now, if you're questioning how to get there, make an appointment with Clark. We'll jump on a call and have a conversation about that property you're looking at and how to go find and source the best thing. So that's how the loan piece works. Now, there are some fees. We have a 1-point origination, $500 for docs, title work, appraisal could be $1 to $2 grand. And if there's rehab being done, maybe there's environmental. So we have a variety of different things. The key component is, remember, if you have the down payment of 25% and the debt services, we're going to be able to get you these properties. Now, here's the cool part. In the commercial world, you don't have to have the down payment seasoned. It can be gifted. It can be borrowed from a HELOC. It can be a syndicate of money that's been put together. They'll ask where it comes from, but it doesn't have to be seasoned like it does when you're buying a home. They want to see your personal W-2 history. So that's some of the basics about multi-unit. Any questions?
No, I think that's fantastic. You explained it really well. And I can be reached at 801-557-8540. Email clark@clarkharvey.com or go to clarkharvey.com. Thanks so much, Dave.
You bet. Thank you.